panel discussion for the day on the theme Mining, Refining and Recycling, India's gold mining resources and opportunities in a transforming industry landscape. And for this panel discussion, I request our dignitaries, our esteemed speakers to kindly grace the dais. I invite Mr. Keyur Shah, CEO, Precious Metals Business, Muthoot Pappachan Group, to kindly join us on stage. Mr. Shivanshu Mehta, Senior VP and Head, Bullion Multi-Commodity Exchange of India Limited, MCX, to kindly grace the occasion. Mr. James Jose, Managing Director, CGR Metalloys Private Limited, and Mr. Bhargava Vaidya from BN Vaidya and Associates to kindly join us on stage. Ladies and gentlemen, a big round of applause for our esteemed speakers. And lastly, I would like to request our moderator, Mr. Suvankar Sen, Co-Chairman, National Council on Capital and Commodity Markets, ASSOCHAM, and Managing Director and Chief Executive Officer, Senco Gold Limited, to kindly join us on stage and to moderate the discussion on mining, refining, and recycling, India's gold mining resources and opportunities in a transforming industry landscape. Ladies and gentlemen, please show some energy and put your hands together for this wonderful panel discussion. And once again, I request our audiences to kindly ask questions once the discussion gets over. Thank you so much. Over to our moderator.
Thank you very much, everyone. Thank you to my panelists. And, it is a very interesting sessions that we're having from the beginning, the first session, second session. We've kind of understood that what is the importance of gold in the industry overall, what the roles playing, how to make gold a much more integral part of the overall financial system. But from the financial aspect of it, gradually we are coming towards the physical aspect of it. And in order to become financially strong, we need to ensure that how are we sourcing our gold in the correct manner and a manner which makes us self-sustainable. So for that, we have very esteemed panelists along with us. Mr. Keyur Shah, who's from Muthoot, looking at the various recycling businesses. We have Shivanshu ji from MCX, he needs no introduction. Mr. James Jose, who's been running a refining and a bullion unit, importing dorés, and that's the focus area with which we would want to understand the business from it. And Mr. Vaidya, he's been as the Vishwa Pitamaha, guiding everyone in the industry with his knowledge and wisdom. So I'll start with Mr. Keyur. Can you help us to understand that, in your experience, in your business, what are you seeing in terms of sourcing of gold, recycling of gold? Because we've had discussions today where it is said that 25,000 tons is the quantity of gold lying in India. So in effect, if we are importing 750 to 800 tons of gold every year and it keeps getting added in various forms, we are already sitting on huge quantities of gold and we really need not import. So how, as a company, you are trying to motivate consumers, end users to recycle gold so that those gold can come for proper use? And what's your perspective, and how do you think that you can do it better with the help of policies, with the help of various initiatives, how the government can support us or the industry can support?
Yeah, thanks Suvankar, and thank you ASSOCHAM for having me here. I think wonderful discussions have been happening since the morning, and as Suvankar, you rightly mentioned, now this is where we need to bridge the gap, physical, and what we, in the morning sessions, which were earlier sessions, was digitizing it, financializing it. Now, one thing, I think in India, 25,000 or 32,000 tons of gold is lying in private households and temple trust. How does that gold come out? As a group, Muthoot as a group, I'm from the Muthoot Pappachan group, we've already, I think, shown the way forward in terms of bringing out this locker gold in terms of giving the gold loans. So just now, if you look at the Kerala gold loan NBFCs, so all the Muthoots and Manappurams and others, almost 300 tons is lying in the strong rooms of these companies. So that started, I think, that journey since last 20, 30 years or even more, that at least that much gold has come out where end consumers have taken loan against that gold. Other thing, as a group, in my the business which I started for the group, in the Muthoot Pappachan group, is about gold recycling. So we've now started setting up retail touch points called Muthoot Gold Points, where only thing which we do is purchase whole gold from end consumers, and that has been growing pretty well since the last 2-3 years. We in fact just touched the launch of 100 branch last week, and we so far have purchased 5 tons of gold from consumers. So that's where, and now you're seeing with the new age customers, even the young customers, that is what is required. We need organized sector players, and there's a room for huge organized sector players in India where they can offer a very transparent platform where the consumers feel that they are not being shortchanged. They are getting full transparency in terms of purity assessment of their gold, and they get a fair value. And as you said, say, okay, 25,000 to 30,000 tons which are lying, even if one person can come out annually, it just reduces our imports by 30% in terms of gold. So that is where I see a huge scope. That's where the market is moving. But there needs to be incentives. So one of the things is about the GST part. So when a customer sells gold, purchases gold, he's paying 3% GST, whether it's a coin, bar, or jewelry. But when they sell, 3% is gone, right? So then they prefer going to the unorganized sector cash market. And that's what is one of the biggest challenge why it is not still coming out formally. So I think that can be done. Also, the GMS, which I think the government launched with the right intent, but it didn't materialize because at the ground level, bridging the gap in terms of how to collect the gold from end consumers. The collection centers were centers which consumers never went to. They were these hallmarking centers which end customers never knew. It could have been jewelers. There are a lot of good jewelers. It could have been gold loan NBFC touch points, or the gold points which I was talking, which we have created, where the consumer is already, the trust factor is there. They know that jeweler. They know that gold loan NBFC or the group. They would be more comfortable. Okay, assessment was the issue. How would people assess it? But that's happening. Anyways, it's happening. Only if the customer is satisfied with that assessment and they're getting a fair value, then only they transact. So I think these are things which are required. And maybe government incentives to get more and more people to collect the gold from end consumers, giving a fair value and transparency.
Right. So one of the things that's coming out is the GST that is hindering people from selling or from giving it on loan. In terms of building trust and transparency, your company are doing a lot more things. Maybe just the way the government is encouraging on hallmarking, BIS, there could be a much more transparent ways in which government can promote that this is also a great way to.
Yeah, definitely.
Right. Okay. So thank you very much. I'll go to Shivanshu ji. Shivanshu ji, here we've seen one source of gold, which is your recycled gold. Coming to you as an exchange, you are sourcing gold from multiple channels, be it the bullion dealers, the ones who are impaneled in your system. Maybe many of them are importing the gold, many of them are refiners, recycling it and then selling it through your platform. How are you looking at where the gold is coming from? Is it that ultimately what's the objective? Reduce import, promote internal gold, whether it be mined, whether it be recycled. So do you have any analysis that this is a change that you're seeing in terms of import versus domestic? And the people who are selling in your platform, are we getting that international standard? Because if we have been in multiple panels, we have discussed how to make Indian gold delivery standard LBMA level standard. So any kind of technology you need or any kind of consciousness, training. So if you can address two issues.
Yes. Thanks, Suvankar ji. Very valid question. I think, being the leading exchange, we always thought, that this is something which is incumbent upon us. We have to do it. And in 2019, December, when the BIS introduced the 17278, that is the Indian standard, we built the MCX good delivery norms, which is a comprehensive system wherein we impaneled those domestic refiners who cleared comprehensively the technical qualification audits, which is at par with LBMA, what we created, and also the financial audit. So if you clear these two things, and there are certain basic eligibility norms, criteria, then you are able to be an MCX impaneled domestic refiner. And we have 4 of them right now. There were 6 initially, 2 are in the formal list, there are some in the process. Now, what that does is that it places our Indian refiners at par with the LBMA refiners. Initially, you're aware that MCX used to have only LBMA gold. Now, in the same contract, at the same price, you see Indian gold, and we have had almost to the tune of around 10,000 crores plus of Indian valued Indian gold, around 15, 16 tons. This also plays an important role, which you were, pointing out towards recycling, reduction of import dependence, and I think it also plays a role of spot to futures integration, because our spot markets, whenever there is any parity disparity, they are able to get that gold into exchange good delivery and deliver against their positions. So this actually makes the spot markets also healthier. And as you would have seen that during the month of February, we had a very, ever since December onwards, we had a cash and carry trade because of various prevailing disparities. All of that got consummated by way of delivery. And we have had 20 tons of gold delivered this financial year, which is a sizable amount. So ultimately, it only proves that this step can integrate the markets, spot and futures better.
Is 20 tons a growth from last year?
Yes. In total, we've had around 165 tons. Out of that 165, 20 tons is this very year. So it is the highest ever in any single financial year.
Right.
And in February, it was about 5.5 tons out of that, February month.
Right.
So, whenever people are having, a two-dimensional view on duty or on, domestic parity, like the way international parity itself has been, shaking, not just moving. In silver, when you saw in October from, backwardation, scarcity to January contango. And then Indian rhetoric played out about duty, etc.
Right.
So all of that meets by way of successful delivery is a healthy option, I think. Yeah.
And any trend change in terms of the gold? So is it mostly it is refiners gold which is coming, or can you identify how much is the imported gold that is being sold in your exchange? How much is domestic?
Yes.
So what any kind of percentage?
Correct. So I think since Indian gold, like I mentioned, out of the number which I told you, it is still about, it could be maybe around 10 to 15% yet, but it is gaining ground. And we've introduced newer contracts. So in those contracts, gold, for example, 10 gram, also we have the Indian refined gold.
Right.
And I think silver, while you may not want to call it, because see, BIS doesn't have an accreditation for silver refineries, but then our domestic refineries in silver are also LBMA, but they're actually domestic. So we do about, we did 700 tons of silver delivered in 1 year, in the previous year, calendar year. So which is equal to the country's, I think, domestic production, or thereabout, if not equal. So this again, and what is on the buy side, product-wise, you have 8 gram, 1 gram, 10 gram coins. So it is an asset which is changing hands. It is transferring from one side to the other.
Right.
And we have the 1 kilobar silver, which has become very popular. Almost 580 tons of that product, or maybe more now, has been delivered in these past 3-4 years.
And has the user base increasing of the buyers?
Yes, I think if you see in exchange parlance, we measure the unique client codes, and the turnover, of course, it is 5-6 fold of previous year, mainly in options, because the market demands options right now because of the volatility. So definitely participation in bullion is
there. So we just want everyone to keep the certain numbers in mind. Like what Mr. Keyur said, that if we can only utilize 10% of the gold existing in our country, almost 30% of the import that we are doing can be addressed. That's 1%, sorry, not 10%, 1%. And here we have another number which is about 20 tons, which might be like a very smaller amount in the overall import. But what it will all have to get connected is that the internal gold, the recycled gold, the refined gold gets more and more transacted through your exchange. And these are the dots that we need to connect.
Sure.
Coming to Mr. James Jose, sir, you've been in the business for so many, many years. You are running a refining center. which is of the highest standard. You're importing. What is your understanding of the market in terms of mining, refining, recycling? Are you getting sources from the Indian mines? Is that happening reality or no? Number one. Number two, when you are getting your gold, are you dependent more on imports, or are you getting enough and substantial quantity of recycled scrap gold? And what do you think, sir, can help us to reduce our imports and source gold domestically more?
Thank you, ASSOCHAM. The biggest problem the Indian refining industry is facing is the shortage of raw material. Like the availability of jewelry scrap is highly cyclical. Out of the 12 months, we have 6 months off-season and 6 months season period where the flow will be regular. And we have around 60 BAS licensed gold refineries in the country. Out of that, at least 20 refineries are having a capacity of more than 50 tons per annum. But if you look at our production volumes, most of us are operating at around 25 to 30% capacity utilization. That is because of the shortage of raw material doré, either jewelry scrap or doré. If you look at our import license 10 years back, we were permitted to import our raw material gold doré from any country in the world. There are 80 countries in the world producing artisanal doré or big mines doré. But now, because the India has entered into many free trade agreements, like ASEAN countries, like 7 countries out of bounds for us, because there is a zero duty import permission from ASEAN. So it will get, if we import doré, it will be coming under zero duty. So it is banned. Similarly, we have another agreement with the 25 LDC, least developed countries in Africa. So all the big doré producing artisanal mining countries are out of bounds now. So many reasons. So to put it shortly, the DGFT has now restricted our import license to 10 countries. So all these 40, 50, 60 refineries in the country, they are chasing these 5, 10 countries. And you know, in Africa, the mining countries are increasingly producing their own bullion. They are restricting the outflow of bullion, like Australia. In Australia, it is not permitted. Russia, it is not permitted. China, it is not permitted. So the sourcing countries are getting lower and lower. So we are facing a big problem about doré sourcing. Of course, in the past 1 month, because of this war and flight connectivity problems, none of the refineries in India are importing doré because of these issues. So even regarding competitiveness, I would like to add a point that Indian refineries are technically competent. Our product parameters are excellent. We produce 999 and 499 bullion because we have all the best technologies. And in scale also we have, like I said, more than 50 tons per annum capacities. But one area where we find it very difficult is whenever the Indian prices are in a discount of say $80, $90 in the last 1 month, gold is available at cheaper rates in India, but we cannot export because Indian refineries are not permitted to export 24 karat bullion for historical reasons. And even if we are permitted to export, there are gray areas like the refund of the GST and the import duty. Like we pay 6 plus 3 and 9% import duty, which is a huge amount. We need to get it back on a real-time basis. We cannot wait for 2 weeks. And the duty structure also is not real-time now. So because it is static, it is revised only every 15 days. We have been requesting the government that please permit us to export on a passbook basis, like what we import and what we export. It should be adjusted in the passbook. That is one area which has not been touched upon because the government says that we are a net importer. We don't want the country to import and then export. So these are the problem areas we are facing.
Right. So I think that ease of doing business is one major problem. And I think we need to utilize this platform to voice the concern and the challenges that you as a refiner and from a recycling business perspective can add value to the Indian economy by utilizing your resources, by running on more higher capacity, and your sourcing of raw materials also needs to be much higher so that you can buy it at a much more competitive rate. And that's where the profits and the margins and the taxes of the economy can go up, right? So it is just the unnecessary blockages in many cases that is stopping you from growing. And as far as mining is concerned, sir, what is your take in India while in Kolar Gold? I'm aware that some of our refiners are sourcing gold from there. Where are you seeing that aspect going?
Coming to the mining in India, we know that the only productive mine in the country is Hatti Gold Mines, which is producing around 3 tons per annum. And that goes to one particular refinery every year based on public bidding. The remaining 10 or 15 tons produced in the country is coming mostly from copper mines, copper, aluminum, and the gold is a byproduct of their copper mine, like Sterlite and Birla Copper and all these people. So we don't have a practically we don't have mining output in India. Of course, the government has issued licenses in the past 5-6 years, but please understand that for gold mining, we need a long-term policy because you just cannot go there and dig out the gold. See, in gold, it is like this. We need 5 years' time for exploration, 5 years' time for excavation, and then another 5 years for exploitation, commercial exploitation. So you have to be patient for the first 5 years. I'm doing 5-year exploration, 5 years excavation. I'm not getting any money out of that. This is coming under state governments. By the time this 10 years is completed, 2 state governments will be changing, and they'll be changing the policy. So I'll be getting any productive output from my expenses I have incurred in the first 10 years only from the 11th year onwards.
Right.
By the time the state government changes policies. So what we would request is that the government, just like the crude oil import policy, mining policy, the country shall have a good mining policy under the control of the government of India. It shall not be permitted to the domain of the state government because they have very vested interests, like, you know, the quarrying and all these mining licenses are a big money spinners for the state governments and the political parties. So it is not like quarrying or any other product. This is a long-term business activity where you have to spend money. You have you have endless amount of money you need to spend, and you will get the output only from the 11th year onwards. So the government shall have a long-term policy. Then only we will get really good volumes from the mining output.
Right. Thank you, sir. Coming to Mr. Vaidya, you have heard all three of them, right? From your experiences, it looks like that there are certain policy gaps, if addressed, and if there are a very strong collaboration between the private and the public in terms of addressing those issues, then the internal consumption, internal resource utilization, internal sourcing can become much, much stronger, and we can truly become a golden India. So what is your take on it, sir? That what are the policies you've heard on the GST aspect of it, you've heard on the various mining and refining policies of it. So to you, what are your suggestions and observations on steps to be taken on these subjects?
I'll thank you again for inviting me. And I would like to remind you, sir, your company's experience in this business is more than all of us combined put together. So you are the most experienced person here. I did not know anything till 96. Okay. So taking a cue from what Keyur was saying, that if, and what we said in the previous panel also, it's definitely not something which we can sell tomorrow morning. We discussed this offline some time back, that if there is no GST, half of the problem will be solved. The entire structure works, and it's not something wrong. World over, if you treat gold as almost a pseudo currency, then there cannot be any GST applied. You can have your taxes. There could be some transaction tax, everything. But this happens. Jewelry, I am not asking for exemption. It's a different product. It's a consumer product. Then the system becomes much easier. Now, how government is to collect money, we don't know. But now let's work within this framework, how best and what changes can be done. I would now touch upon what James was saying. This was, passbook was something like giving in. Give me something, I want to work. In past, under this particular forum also, I have said that I'm allowed to export currency notes. The dollars which the banks collect, they can be exported. The conditions are that advance payment and all could be done. I think our refining industry will agree to all of them. Advance payment, let it get in. and we will export. So if you can export currency not, what's so much problem in bullion? Yes, there was always an angle where the regulator will think there is. Unfortunately, we make a group which is generally not trusted. We have come away from it, but it is generally, anything goes wrong in a steel mill or in agriculture, you write off thousands of crores, no questions asked. Anything going wrong anywhere, if 1 crore or anywhere in a bullion dealer or a jeweler, it comes out as a scam. Whether it is regulator, whether it is media, or maybe all of us sitting here. So that mind change has to change. If we can get that thing changed, it is done. I'm sorry I'm getting into some of my wishes. But yes, there has to be a very clear understanding. If there is a export of primary gold, what should be the minimum value addition? World over, we are not paying more than $1 for James. So that should be the fair value addition, $1 over the price. And now,
it is 2%.
yeah, so it is 2%. Even what I'm saying, we are not nowhere near the sense. If instead there you are ready to go up to 1%, also saying that there is a differential, then we can have a healthy trade. No trade works very healthy except if there is two-way trade. As a dealer, I think, Mr. Sen, you also will know that if the other fellow always knows which side of the market you are gone. You know, I need once that permission yours. Then the market changes. If you say once in 100 also, it changes. So that structure has to change. Mining, as he rightly said, 15 years, take it aside. For scrap recycling and scrap getting on board is what we should concentrate on. I was talking to you and other people also that even we want to encourage people, and what Keyur also mentioned, that with organized players, if you want them to, anybody to give back the old gold and old jewelry, let's change two of our acts slightly. That if I give pure gold of 100 grams and I take 102 grams, I will be charged GST on 2 grams and no capital gains because I have not liquidated my holding of gold. At the same time, if I sell 100 grams and take 80 grams, okay, no GST, I don't want any credit of my old GST, and on 20 grams, I will pay capital gains. At present, coming to you, Mr. Sen, or going to Keyur or Mr. James, I may feel that, oh, I have sold and bought, I sold to Keyur or James and I came to you, I'll pay capital gains. So I go to somebody who's not so clean. And once you start going to gray, all the things go down and everything goes below that. This is not black money which is going around. This is 90% of the Indians are having white money. Maybe some intermediary here and there can be. Everywhere there will be some players. So let's structure our act. I thought in this new Income Tax Act, we had a very good chance. And through the request which the ministry had with you, you can structure it in such a way that we can address some of the smaller problems. And then let's get together and get into the bigger one.
Right. Thank you. Thank you. So before we end the panel, I would like to take a concluding remark from all our panelists. Mr. Keyur, you've heard all of us. And what would be your last takeaway and your last recommendation or want from the government that you think we can give them the message?
I think many more organized sector players need to come into the gold recycling business, at least to act as a retail touch point to purchase gold from end consumers. And for that, if the government can consciously incentivize in terms of, say, maybe a tax holiday or something. See, we as an organized player, we are buying this old gold from consumers. Margins are very, very thin, very thin. But it's a good business to go in. It's a booming business because now the youngsters, they do not want to sell gold in cash. They want money in the banks, where they want to do a lot of new things. They want to give a down payment to purchase a house, to get a gold loan. They want to fund education, higher education. So I think that's probably that will change, given all the restrictions, and as Bhargava mentioned, assuming currently the wish list is there, that there could be some changes in the GST norms or in terms of capital gains or how consumers behave. But in the current scenario, I think many more organized sectors, there's room for a lot more, and that will, at least in the mid-term, will change a lot of things.
Correct. Shivanshuji, we had discussions on the EGR, on digitalizing, right? Like everything can be connected, right? From him refining the gold, trying to sell it on your exchange, him getting the scrap golds, trying to sell it on your exchange, consumers trying to sell it, and you ultimately becoming a platform to sell it to the end buyers. So from your perspective, what will be your message to the government?
Yes, one, what you already said, that EGR represents a true financialization potential of the product. From one side where it is to one side where you can actually tokenize it, distribute it in 1 gram format on a spot basis. If futures can see so much of delivery, can we imagine what spot can see, right? So EGR needs to be, all these bottlenecks need to be removed. GST, like Bhargava said, needs to be looked at. Bullion versus jewelry GST, whether it merits or not. Secondly, even if it merits a GST, then it has to be made very, very simple that the offset should be available at the point of introduction into DMAT, whether or not that transaction is covered or not. Otherwise, why would a person deposit? That's one thing, as far as EGR goes. The other thing is when we say that we want to be price makers and not price takers, which price maker in the entire world is a one-way street company or country? You have to have a two-way street. So if you are only an importer, fine, gold will continue to come. We have set up IIBX is one side of it. Unless we allow potential for export of bullion. You see, you have to really look at bullion and jewelry separately. If we allow export of bullion, then we become a vibrant market. Financialization of this 25,000 tons will also take place. Secondly, when we talk about, I was talking to Keyur just now, about loan. Now again, banks versus NBFC. When you're talking about a bank being allowed to finance bullion, bar format, why NBFC cannot finance? So is there an assumption that 25,000 tons is only jewelry? I'm sorry, it may not be the case. And why must we not allow a bullion stage, which is a B2B type of a stage? It is feeding an industry. It is feeding your industry, jewelry industry. If you don't want to arm it with a financialization, then jewelry is only a part of the story. So we have to allow bar and coin also in the same format. Keyur should be able to happily, offer. Export of bullion versus jewelry, value addition or no. Third is again bullion, jewelry only, taxation. It's an investment vehicle on one side you're saying, bullion. Jewelry may be an ownership asset, I don't mind. So again, taxation-wise also these two need to be differentiated.
Right. Thank you. Mr. James, concluding remarks.
Like Mr. Keyur said, we should target a mobilization of at least 1%. 1% is quite 300 tons from the old gold domestic holdings, also from the temples. See, this 1%, there are arguments that the industry is not properly incentivized. People are not ready to part with their gold and all that. See, if you look at the total, if you analyze the total gold holdings, at least 30% of the gold will be having no usable value. Old gold, ancestral things and all that. Maybe 1/3, 30% will be having some emotional connect, some gifting and all that. Another 1/3 will be coins and bars, which is always available for liquidation. So 1% we should target. And I would like to say the industry is properly incentivized, because earlier the commission or the amount processing charges was very low, but in the revamped GMS, it has been taken up to 1.5%. Now, in addition to the hallmark centers, jewelers are also permitted to act as mobilization agents. This 1.5% is a huge amount. You know that. It's because of various reasons. And it's easy also. No making charges like that. So, with the 1.5%, all the stakeholders, the jewelers, the refiners, the collection centers, we are all incentivized. Only thing is that the people are slightly apprehensive for capital gains or income tax reasons. there is a ceiling of around 950 grams for a family, which is exempted from any income tax assessment. So we should give some publicity for that. That you don't have to worry about up to 950 grams for a family. That will take care of the apprehensions. Of course, the government has to give some incentives like waiver of capital gains, like Bhargava said, at least for the 5 years, if you can offer a amnesty or a waiver from capital gains, more than thousands of tons will come into the market. That's what I mean.
Bhargav bhai, last words from you.
Yeah. I like to thank James for saying only waiver from capital gains. He is not, we all are not suggesting that unaccounted cash you convert. So it is any immediate future gain you
Right.
delay. Or one of the suggestion was you delay till you sell the demat part. Indirectly it is there. If I convert into EGR, there is no capital gains. Right. So till I sell EGR, or if I hold for 5 years in EGR, no capital gains, that structures we can do.
Correct.
And one more thing, what we immediately had to do is incentivize the right people for mobilizing the gold deposit scheme. Sovereign gold was successful because the system was incentivized. Whatever people may say, it has changed the thinking of Indians that yes, I can hold a paper gold. So let's work on it, and maybe next time you have a thing that we have a lot of mobilization in gold monetization
So
scheme.
lastly, one takeaway that GST should not be applied on the physical gold, whether it be in old gold, recycled gold, or bars. And just towards the ending remarks, I would like to say that BIS is working on capturing the images of the jewelry. And if we assume that 15 to 20% is the making charge on an average, and 18% or 12% of 15% is around 2 to 3%. So GST on jewelry of 3% is okay. Let us capture the images, let us charge on it. But when it comes to the physical part of it, to become really robust, we need to think of not charging GST on gold. So thank you very much. Thank you, our audience. I know we are all waiting for lunch, but I think when we have lots of gold, we don't need food. Gold is our food for thought. Thank you. Thank you.
Yeah. Thank you so very much for that wonderful panel discussion on mining, refining, and recycling India's gold mining resources and opportunities in a transforming industry landscape. I thank all our esteemed speakers for their wonderful contribution to the panel discussion. I request everybody to kindly come forward for the group photograph. And I also thank the moderator for conducting the discussion so seamlessly. Thank you so much. And everybody can join us for lunch. It's time to recharge our batteries. And please help yourself. Also, we have Navratri special food for those who are fasting or would like to enjoy that. So please reconnect with each other and have a great networking. Let's reassemble here at 3:15 p.m. Thank you so much. Thank you.